Amazon's biggest profit ever, 53 billion of it is paper. And tonight I'm going to show you exactly where that number comes from, because almost nobody covering this report will. A few hours ago, Amazon posted the best quarter in its history. First $200 billion quarter ever. Its cloud grew faster than it has in 5 years. The stock exploded after hours. And inside that same report, a $53 billion profit that is a markup on paper, a spending bill that just got raised to $220 billion, and free cash flow that has gone negative. So which is it? The greatest quarter Amazon ever reported, or the most expensive one? 5 legendary investors met its score it tonight, hours after the print, and the board has never been this split. Stay with me. Here is tonight's tape. Amazon closed at $235.50. The report hit after the bell, and the stock ripped roughly 8% in after-hours trading. On a $3 trillion week for big tech, that is another $100 billion plus of value, created between dinner and midnight. This is the same night session. The board convened tonight, July 30th, 2026, hours after the report, with the after-hours tape still moving. On the docket, the record, the machine, the 2 footnotes, and 5 legends who flat out disagree. The verdict stays sealed. Understand the week Amazon walked into. Meta reported heavy AI spending, crushed, down 9%. Microsoft reported heavier spending with a beautiful growth number, up 15. The market is grading one thing this week. Does the AI bill come with proof? Tonight it was Amazon's turn at the blackboard, and Amazon walked in with the worst setup of the 3. Because for 2 years the story on Wall Street was that Amazon's cloud was losing the AI race. Azure grew 43% yesterday. Everyone expected Amazon's number to look slow and sad next to that. And I want you to actually feel this number. $200.6 billion of revenue. In 90 days, up 20%, beating the street by $4 billion. No company in the history of commerce had ever printed a $200 billion quarter. That is over $2 billion of sales every single day, including the day you spent doing nothing. The empire is not slowing down. It is inhaling the economy. Now, the number. The one the entire market held its breath for. AWS. $42.2 billion, up 37%. The fastest cloud growth Amazon has posted since 2021. The street expected 31, maybe 33. For 2 years, every analyst on television said Amazon was losing the AI race. That story died tonight at 4:05 p.m. Eastern, and it did not get a funeral. It got a stampede. And here's my favorite freak coincidence in the whole report. Amazon's international retail business and AWS booked the exact same revenue this quarter, $42.2 billion each, to the decimal. The retail twin earned $1.7 billion. The cloud twin earned roughly 10 times that at margins near 39%. Same revenue, 10 times the profit. Whatever you think Amazon is, that is what Amazon actually is now. And behind the cloud, the machine, 1 million robots moving shelves, ads quietly becoming one of the biggest advertising businesses on earth, priming half the homes in America. This is the empire everyone stopped being impressed by, because it just works. So why is this episode not a victory lap? Because now we read the footnotes. And tonight every engine fired at once. North America retail $116 billion, up 16%, margins improving. Operating income overall $27.5 billion, up 43%, smashing consensus, no paper gains inside. And the sleeper, advertising, $19.8 billion in a quarter, up 26%. Some of the purest profit in the whole empire. Retail, cloud, ads, 3 engines, all accelerating on one report. That almost never happens. Here is where tonight stops being a celebration. There are 2 lines in this report that change the story, and you will not hear them on the evening shows. Footnote 1 is $53 billion big. Footnote 2 decides next quarter. But first, the bill, because here is the AI era's dirty secret, and Amazon just became its poster child. They raised this year's spending plan again, $220 billion, up from $200 just months ago. Data centers, chips, power. The chief executive blamed rising memory prices, which translated means the arms race got more expensive mid-race. The greatest cash machine in retail history now works for its own data centers. AI is drinking this company's cash straight from the tap. And here's what the vacuum did. Free cash flow, the money actually left over after the spending over the last 12 months, negative $7.6 billion. A year ago, positive 18. Let me say this as plainly as I can. Amazon generated more operating cash than at any point in its existence, and AI ate every dollar of it and then sent an invoice for 7.6 billion more. Record quarter, empty pockets, both at once. Now the controversial part, footnote 1. Tonight's headline earnings, $5.75 a share, looks like a 200% blowout. It is not. Inside that number sits a $53.4 billion gain that is mostly a paper markup on Amazon's stake in one AI company, Anthropic, not sales, not operations, a revaluation. Strip it out and earnings are roughly $1.87 against $1.81 expected. A real beat, a modest one. In footnote 2, next quarter's guidance, the number nobody quotes tonight, came in below the street at the high end. The machine is magnificent. The headline is partly a mirage. Both things are true, and now you know. So this is the real picture the board scores tonight. Record revenue, real. The fastest cloud growth in 5 years, real and clean. The profit headline, inflated by a one-time paper gain. The cash, negative, because the future is being bought at full price in advance. 5 methods, 1 company, open war. 5 published methods, run as models. The methods, never the man. Fisher on growth, Lynch on what you know, Graham on price, Munger on incentives, Buffett on the moat. Scores sealed until each chair votes. Chair 1. The Philip Fisher model. 15 questions. 1 obsession. Is the growth engine real? And how many years of road does it have? His model does not care what the stock did tonight. It cares whether the machine is accelerating.
The Fisher model sees the rarest pattern in giant companies twice in one report. A cloud at 170 billion run rate, accelerating to 37%. An advertising business compounding on top of the retail flywheel. And margins expanding while growth speeds up, which is the signature of real operating leverage, not a promotion-driven sugar high. And the runway question answers itself. Most of the world's computing has not yet moved to the cloud, and the AI build-out is the largest forced migration in the industry's history. On the Fisher screen, this is what conviction looks like. Growth, acceleration, and margin, all in the same quarter.
The Fisher score, an 8, matching the highest this board has ever given. The growth chair saw tonight's report and basically stood up and applauded. The next chair does his research in your living room and on your doorstep. Chair 2, the Peter Lynch model. The great retail investor beat Wall Street by noticing what ordinary families already use, then asking the killer follow-up. Does the company actually get paid for that love?
Lynch's model starts at the front door. The van outside your house, the box on your porch, the show your family streamed tonight. No company on earth passes the know what you own test like this one. And unlike most beloved brands, Amazon gets paid everywhere. The sale, the subscription, the ad, and the cloud behind the app you used to buy it. The follow-up keeps it honest. The retail half still runs on thin margins and a vice of costs, and the model notices that tonight's cash number means the family business is reinvesting every dollar it makes, and then some. Wonderful company. But a Lynch holder must accept years where the owner keeps nothing.
The Lynch score, a 7. The everyman's chair loves the company on your doorstep. 8, 7, 2 believers. Now the calculator comes out and it is about to get uncomfortable. Chair 3, the Benjamin Graham model. Pay demonstrably less than a business is worth, so you survive being wrong. His model does not watch after hours pops. It reads what you actually get for the price. And tonight it found 2 problems.
Problem 1. The earnings. Graham's screen strips one-time items first, and tonight that removes $53 billion, 90% of the headline profit. What remains is a good quarter priced at roughly 30 times earnings after tonight's pop. Problem 2. The cash. A margin of safety cannot be built on a company whose free cash flow is negative, however noble the reason. And the guide seals it. Next quarter projected below the street's hopes, while the spending plan rises again. The model is not saying Amazon is bad. It is saying that at this price, with negative cash and a paper-inflated headline, you are paying in full for a future that has not been delivered. That is not a margin of safety. That is faith at 30 times.
The Graham score, a 3. The lowest score tonight, and honestly, the model barely hesitated. 8, 7, 3. The board is officially at war. Next, the man who asks why they spend like this. Chair 4, the Charlie Munger model. Invert the question and find the incentive underneath the behavior. Everyone tonight is asking whether Amazon spends too much. The Munger model asks the opposite question. What happens to Amazon if it stops?
Run the inversion. If the AI land grab is real, the company that stops building loses the next 20 years to the two rivals who kept going. So the $220 billion is not madness. It is the rational price of an arms race in which second place may be worthless. The incentive explains the furnace. That does not mean the model wants to stand next to it. And notice what this week actually taught. 3 giants, 1 behavior, historic spending. The market punished one, celebrated one, and cheered tonight's after subtracting its own skepticism. Second level conclusion, the price of staying great in this industry has permanently tripled and the market has not yet decided who is buying an empire and who is buying a bonfire. Too hard to call tonight, not too hard to respect.
The Munger score, a 5. Dead center on purpose. The chaos is rational, the bill is real, and his model refuses to pretend it knows which one wins. 8, 7, 3, 5, 1 chair left, the most famous one. And before the last vote, the board puts one honest fact on the table for the bulls. The AWS number tonight, 37%, has no footnote, no paper gain, no accounting angle. It is the cleanest fact in the whole report, and it is the exact fact the bears said you would never see again. Whatever else is true tonight, that part was real. The last chair, the Warren Buffett model. Moats, owner's earnings, decades not quarters. His model has one small problem tonight. Its favorite number, the cash an owner actually keeps, does not currently exist.
Start with what the model respects. Prime is habit, AWS is switching costs measured in decades, and the logistics network may be the widest physical moat ever dug. But owners' earnings this year are negative. The model's answer to that is patience, not panic. A fortress that spends every coin deepening its own moat is not broke. It is just not paying its owners while the digging continues. The question is only whether the digging ends.
The Buffett score, a 6. The moat is real. The owner's pockets are empty until the machines are built. His model calls that a wonderful business on a payment plan. All 5 votes are in. 2 quick reality checks, then the tally. Lens 2, where was the smart money before tonight? We scanned the latest filings of 15 living titans, and this one is wild. Bill Ackman added to 2.4 billion, his second mega cap doubled down this week. David Tepper added 900 million, Seth Klarman added. And Warren Buffett's own Berkshire excited Amazon entirely last quarter. Sit with that. Tonight, the Buffett method scored this business a 6. The man's actual shop sold every share. That gap between the method and the money is exactly why this board scores methods. Lens 3, the crowd. And tonight, the professionals produced the widest disagreement you will see on any mega cap. Goldman and KeyBank 335, Morgan Stanley 315, and a quantitative value model, same night, same numbers, screaming sell with a fair value near 155. 335 against 155. That is not a debate about Amazon. That is a debate about what profit even means in the AI era. So the method split 8 to 3. The smart money placed his bets in the dark, and the professionals disagree by more than double. 3 lenses, 1 company, 1 night. Tally it. The board score, 5.8 out of 10. Fisher 8, Lynch 7, Graham 3, Munger 5, Buffett 6. The spread 3 to 8, the widest this board has ever produced. And here is the verdict in plain words. Was this the greatest quarter in Amazon's history? Yes, the record is real and the cloud number buried the bears with 0 footnotes. Was it also the most expensive quarter in corporate history? Also, yes. A $220 billion bill, negative cash, and a headline profit that is 90% paper. Anyone who tells you only one of those sentences is selling you something. The board is telling you both. What would change the board's mind? 1. Free cash flow. The quarter returns positive again, Graham's 3 starts climbing, and the whole score moves. 2. AWS. Hold above 35% and the 8 wins the argument for good. 3. The bill. The first quarter, the capex guidance stops rising, this becomes a very different stock. Watch those 3. Nothing else. The board saw tonight's numbers, July 30th, 2026, hours after the report, with the after hours tape still moving. Those numbers will age fast. The 5 methods will not. Rerun them on any earnings night you like. That is the whole point of a playbook. So now you know what the board knows the same night Wall Street found out. My question for you, Record quarter or most expensive quarter ever? Which sentence matters more? Put your own score 0 to 10 in the comments and tell me which chair got it wrong. And if this showed you what the headlines will not tomorrow morning, subscribe. It genuinely helps the channel and it tells me to keep doing these same night sessions. Yesterday Microsoft, tonight Amazon. Which report should the board tear open next? For the record, tonight's 5 voices are AI models built from these investors' published principles. Not the individuals, not their words, not affiliated, not endorsed, and nothing tonight is investment advice. The board scores businesses, never your portfolio. Amazon, the same night filed. 2 giants scored in 2 days and the stamp is already inked for the next one. When the next report drops, the board convenes. Be in the room.